What is up, everybody? Casey coming at you today with a video about trading strategies, trading systems that you can use with the Robinhood Trading app. That's a commission-free smartphone app that allows you to buy and sell stocks, no commission at all. So let's jump right into it. I want to talk a little bit about a few ways that you can structure your trading strategy for Robinhood, because it's really important that we don't just go into Robinhood and buy and sell whatever we feel like just because we feel like it. Like, I have a gut instinct that it's going to go up or whatever. So the very first thing I want to introduce you to is something called a trading system. And I like to think of a trading system, it's really just it's a business plan for your trading. You wouldn't go into business with a business partner without a business plan that specifically defines who does what, who's responsible for what, how are you going to do things. A trading system is a trader's best friend for exactly the same reason. It tells you exactly when you're going to buy, when you're going to sell, why are you going to buy, when am I going to get out, how much am I willing to lose per trade. All of these things are defined in a trading system, and a good trading system will make you a great trader because it's going to prevent you from trading on emotion or just guessing. It's going to give you a way to reel yourself in, keep yourself accountable, and to avoid risking more than you should. Trading system, read up on it, check the links below. I'll give you some great resources, and leave me a comment if you want to know more about trading systems. Have a stop loss in place. Robinhood allows you to set selling stop loss orders. So a stop loss order instructs Robinhood to sell your stock if it starts to drop too much. And we'll find out why that's important here in a minute, but you can just go in, and when you click on your security, you click sell, and there's an order type button up here in the corner. That's where you set up your stop loss order. Really important. Number 3, know your risk to reward. So I will always maintain a 3-to-1 risk reward. And what that means is that your potential downside is, and this is, of course, I'm just throwing this on the graph. This is not well set up. We would set this up better. But a risk reward system basically says that my potential upside, for whatever reason I think that my stock is going to go up here, is bigger than my potential downside. So I would set my stop loss order here at $9.23 with the expectation that it's going to go up to $9.31. But if it doesn't, if I'm wrong, at least it'll sell at $9.23. So I can be wrong 3 times for every 1 time that I'm right, and I break even. All I have to do is beat that. The more that I increase this, so the bigger my risk reward ratio, now I can be wrong 4 times for every 1 time that I am right. And of course, the smaller your risk reward ratio, the more dangerous it can become. That's a little bit more aggressive. Bigger risk reward ratio, it's a little bit more conservative. That will be part of your trading system. So you've got stop loss orders, you've got risk rewards, and you've got a trading system. Now, those 3 things combined are enough to get you above and beyond 99% of Robinhood users. Most people don't know these things. Most people don't use them. So this is going to help you keep yourself accountable and stay safe out there with your money. Number 4, only risk a certain amount of your money at a time. This is really important. Most people will recommend that you only risk 2 to 3%. I agree with that completely. With $100 though, that Robinhood is tailored to people with not very much money to trade at a time, which kind of sucks, because with $100, 2% of your total assets is only $2, and you can't buy or sell anything with $2. And even if you could, the amount of money you can make on it, it would take you years and years and years to build up any kind of value. So you really need about $10,000 or more, the more the better, in order to safely participate in this way. So I recommend like 2 to 3% risk per trade with a 3-to-1 risk reward ratio. With those parameters in place as part of your trading system, you're going to have a really successful time trading, or at least you will give yourself the best chances of success, and that's important. The last thing is that we can go in and we can back test some of our strategies. So if I'm going to use a simple moving average cross as a strategy, I can come in and I can back test this strategy further back. throughout the security that I'm buying and selling. I can test it throughout market times, further back in history. I can actually, there are, Quant Connect is a great tool. Now it requires some programming, it requires some mathematics, you got to know what you're doing, but you can backtest. They have a huge pile of data. You can backtest your strategies there, and it'll actually tell you, when you backtest a strategy, it'll tell you, okay, you won 10 trades out of 12 trades that you executed. Your win ratio is X. Your average win was X. So you can test your strategy, then you can modify your parameters, try different strategies, what works the best for you. Backtesting is an important way to verify whether or not your strategy works. So here's the 4 things. Use the system. Have a stop loss order in place. Know your risk reward ratio, about 1 to 3, or maybe even more if you're even more conservative, and only risk 2 to 3% of your portfolio on any given trade. Those are my recommendations for you as a trading strategy. That's really just a trading system. A trading strategy is different. We're going to talk about that right now. If what I have told you has been helpful, if I've been able to help you make money or save you from making a big mistake, please go over to patreon.com/KCFiedler and consider supporting me and helping to make these great videos for financial education and investor education. Leave me a comment below if you want to know more about trading systems, risk reward, all of that stuff. Here we go. We're going to get right into a real strategy for trading on Robinhood. I recommend TradingView. It's totally free. You can upgrade it and pay like a monthly fee to get some better features, but as a free service, it's more than powerful enough to do what we want. We're going to need to understand charting a little bit. So if you don't know anything about charting, let me know, leave a comment, and we'll talk some more about charting. There's lots of other great videos out there on the webs. So I have set up a simple moving average chart down here. And a simple moving average is a mathematical term, but it also applies to the strategy. The strategy is pretty simple, and here's how it works. With this strategy, I will buy when the short-term moving average, so this one down here, when the short moving average crosses the long moving average, I buy. And I sell when the short moving average crosses downwards over the long moving average. So in this case, according to my strategy, I would have bought with 3% of my portfolio, would have bought stock at $9.12, and I would have sold 3% at $9.29. Not bad if you've got a lot of money to work with. That could really turn into some profit for you. So again, we'll take a look further back. So I will buy when the short-term moving average crosses the long-term moving average here at 883, and I will sell when the short-term moving average crosses downward again at $9.08. Again, another decent, quick little trade, and this is at a 1-minute interval. So this is something that you would buy here on April 24th at 11:36, and you would sell on April 24th at 10:44, or you would just sell at the end of market close here. You didn't want to stay in the market overnight, which might be a smart idea. You never know what the market's going to do overnight. Either way, you'd make a decent penny. Not bad. So this is a really, really simple strategy called a simple moving average cross. The idea is that the short-term moving average takes the average price of the stock over a narrow window of days. So the last 20 days, it takes the average price. And then we compare that and we chart that against the long-term moving average, which takes the average price of the security over a bigger window of days. So the average over 40 days. And that long-term moving average is going to respond more slowly. So you see that the short-term keeps crossing over and under, over and under. And this is a mean reversion trend strategy. So the idea is that I think the short-term price is going to try to meet and balance with the long-term price, because you may or may not subscribe to this, but that's the idea behind a mean reversion strategy. Is I think that the short-term is going to try to balance with the long-term, and of course you can see the short-term keeps crossing over and under, over and under, over and under, presumably trying to equalize and seek equilibrium with that long-term average. That's the idea. That's the strategy. Leave me a comment, give me a like, hit the subscribe button. We're going to have more videos coming out soon. And this is just one strategy. And make sure that you go back, watch the first half of the video, understand your trading system, have your stop losses in place, your risk reward, and then have a great strategy and test it out, see how it works. Test drive it a little bit and only risk a little bit of your money at a time. Those are the best ways for you to be successful at trading on the Robinhood app. Head on over to patreon.com/CaseyFiedler. Become a patron, support me, tell me what videos you want to see, and I'll see you next time.